Nev Gold is a client and sponsor of this video, and we own shares in the company. Please do your own due diligence and make sure you read our disclaimer before listening to this. Here's how this little-known stock could hand investors 800% before the end of this year. But first, let me get to the reasons why. Something big is happening in the gold sector. Yet, the media has been extremely quiet about this. But those who are in the know are quietly making moves before things get out of hand. And that means time is running out. Today, I'm going to introduce you to a company primed to take advantage of this situation. In fact, this company just made a massive announcement, one that could send this company's shares up 800% by the end of this year. More on this in a bit. Gold just blew past $2,000 an ounce and is now hovering near the record price set on the first day Russia invaded Ukraine. And while analysts believe it might just be a temporary rally triggered by the SVB collapse, they're missing something much bigger. In fact, if you look closely, the price of gold has been completely detached from the market for the past 5 months. In other words, this gold breakout points to a much bigger story. Many believe the recent rise in gold has to do with inflation, but for the most part, gold has little to do with inflation, especially in the shorter term. In fact, most of the time, it doesn't move in tandem with inflation at all. Just look at how gold tumbled in the most inflationary periods after 1980. In other words, investing in gold based on inflation has largely been a money-losing strategy. Had you been trading gold since 1980 based on this inflation theory, you'd have blown most of your money. Instead, what gold is most connected to is real interest rates. Ever since the end of the Bretton Woods, its prices have moved counter to these rates like clockwork. The logic behind it is that real rates, in effect, show your inflation-adjusted earnings from the safest government bonds, such as treasuries. So, naturally, the more income you earn risk-free, the bigger the allure to invest in bonds rather than incomeless gold. But 5 months ago, the century-long peg broke. Take a look at how real interest rates have soared since mid-2021. By the logic of that peg, gold was supposed to crash. Yet, despite its unattractiveness relative to bonds, the yellow metal is nearing its all-time high. And it's not just this correlation. Throughout history, gold has served as a remarkably sensitive barometer of risk. That's why Wall Street calls it a fear trade. It means that if there's more risk in the markets, demand for gold jumps, and so does its price, and vice versa. But take a look at what's happening now. Inflation is tamed, or at the very least has slowed, and the Fed has backstopped the banking crisis. In other words, the scary stuff that had the markets rolling over the past 5 months isn't as bad now. And yet, gold is still climbing. And that means something else is causing the price of gold to rise. And that something is so monumental that it overrides everything that has determined gold prices since the beginning of the fiat money era. This gold rally could be a sign that the BRICS new reserve currency is not just a concept, but could be imminent. Let's connect the dots real quick. In a letter, A New Powerful Coalition is Coming, I expose how President Xi Jinping of China spent most of the past decade laying the groundwork to dethrone the dollar. First, when the West slapped Russia with sanctions over Crimea, he convinced the BRICS to launch a replacement for the West-dominated International Monetary Fund and World Bank. Then, last year, Xi talked Russia, Iran, Venezuela into ditching the petrodollar and settling some of their trade in the yuan instead. After that, he launched a pilot for the e-yuan, a CBDC edition of its currency, for cross-border transactions using a SWIFT-like banking system, and it looks as if he's successfully gotten his BRICS allies on board. At the last summit, BRICS announced it would launch a reserve currency built on the basket of its member currencies, likely led by the Chinese yuan. A new Cambridge paper studying Xi's master plan even states that BRICS now has everything it needs to replace the dollar, everything except the scale. But don't think the BRICS nations haven't begun preparations for the bloc's expansion. Last month, the BRICS nations announced they would entertain including other countries in their coalition. And immediately, a dozen oil nations lined up, including oil producers Argentina, Egypt, and Algeria, and even bigger players such as the United Arab Emirates, Iran, and Saudi Arabia. In fact, Saudi Arabia's de facto ruler, Mohammed bin Salman, has been busy building relationships with Russia, China, and even Iran, while distancing himself from Biden and the United States. If the world's largest oil producers outside of the US decide to start trading oil in another currency, it would be a major blow to the might of the US dollar. Now here's where it gets crazy for gold. Rumor has it that the BRICS reserve currency won't be just fiat. Instead, Pavel Knyaztsev, deputy director of the Russian Foreign Ministry, hinted at during the last BRICS summit that it will be backed by the commodity reserves of its members, predominantly gold. But you don't have to take his word for it. The evidence is out there in plain sight. As I revealed before the new year, central banks are quietly building up on gold at a rate not seen in over 50 years. Last year, they added over 1,100 tons of the metal to their reserves. That's 2 times the average surge over the past decade. And, surprise, surprise, China and India, the core of the BRICS, are the principal buyers fueling this frenzy. And those are just the official figures. You see, central banks aren't obligated to disclose their gold purchases. In fact, that would be counterintuitive to their goal. I mean, if everyone knew what they were up to, the price of gold would surely climb. Why force yourself to buy at higher prices? It's no wonder that over 87% of gold purchases were unaccounted for last year, equal to more than 500 tons of gold. For some perspective, that's equal to 5% of America's entire gold reserves and 1/4 of China's official gold stock. So who's the mystery buyer, or rather buyers? A few months ago, we could only speculate, but now the cat is out of the bag. Last November, China reported an increase in its gold reserves for the first time in 4 years, and its official stock has grown for 5 consecutive months now. But why now? Well, the timing suggests they're building a backing for the launch of the new BRICS currency and showing other nations that they are indeed building up gold stock. It's just a matter of time before China reveals the real magnitude of its gold holdings. What happens when the US dollar loses dominance and fiat currency is no longer trusted in international trade? What happens if gold becomes the end reserve asset? Well, it's pretty simple. The price of gold will explode. This is why I'm once again excited about the prospects of gold stocks and looking forward to introducing our readers to these opportunities, starting with a junior gold stock whose recent announcement could prove very rewarding for its shareholders. Let me introduce you to Nev Gold, which trades in Canada under the symbol NAU and in the US under the symbol NAUFF. Nev Gold is a budding Canadian gold junior with rare upside potential. It owns projects in Nevada, BC, and Idaho. While all the projects have potential, let's focus on their most advanced project, Nutmeg Mountain in Idaho. Nutmeg Mountain is a low sulfidation epithermal gold-silver deposit with over 70,000 meters of historical drilling. The geology of this deposit is comparable to several other epithermal deposits found in the western USA, home to some of the world's largest gold producers in history. In fact, some of the most profitable mines in the western USA and globally have been low sulfidation epithermal systems. We call them LSE. The attractive characteristics of LSEs are simple. They have the potential for large open pit heap leach tonnage at or near surface and the potential for large high-grade feeder structures at depths that can have bonanza-grade material. This gives you the best of both worlds, as the near-surface heap leach ore can provide immediate cash flow while the bonanza-grade system at depth is being advanced. Think of an LSE having 2 distinct parts of the system: the disseminated, consistent, near-surface heap leach part of the system, which is amenable to heap leaching, and 2, the high-grade feeder structure, which is the pathway where the gold at the surface comes from. In short, they're cheaper to mine, make money in most gold environments, and have a minimal environmental footprint. Nutmeg currently hosts an LSE resource of just over 1 million ounces of gold, but this resource could get much, much bigger. You see, Nev Gold just announced an extremely important news release regarding the inaugural drill results from its Nutmeg Mountain project. For geologists, these results look very promising, but what do they really mean for investors? Well, let's break it down. First of all, this release not only confirms that Nutmeg has a large heap leach gold system sitting at surface, but also has a massive high-grade potential at depth. What's exciting is that Nutmeg has historically only been drilled at surface, and the deeper part of the system was not properly tested. In fact, the project's historical average hole depth is only 75 meters. It's no wonder the guys at Nev Gold are excited. Not only do these drill results show significant potential for expanding the open pit near surface resource, but there is also the prize at depth, which has remained elusive to date because no one has drilled that far down. And based on the recent drill results, Nev Gold now believes that the near surface resource could double while still having the large high-grade target at depth. Take a look. And in just a few short weeks, we should have the results of the much deeper drilling. If those results come back positive also, it could be a game changer for Nev Gold. Why? Well, the intact 2-zone LSE system at Nutmeg is very encouraging and not one that is seen often. Many times, the upper part of the system has been eroded over centuries due to weathering and/or concealed by fault block movement. Normally, these LSEs either have the top part of the system or the bottom part of the system remaining, but very rarely do you have both parts of the system intact, like at Nutmeg. This not only means that there will be more near-surface gold to find, but they also have a deeper high-grade feeder structure at approximately 300 to 500 meters below surface. And with a known 1.1 million ounces of gold at surface already, it's like having a cake with icing and a large cherry, potential high-grade zone at depth on top, or in this case, on the bottom. The known expression of the recently completed 1.1 million ounce resource resource boundary at Nutmeg is already 2,300 meters long by 650 meters wide and over 100 meters thick. That's a very, very large mineralized system. And given the recent drill results, the NevGold team now believes that there is another 100 meters of vertical thickness not included in the current resource, as well as significant untested lateral extent. In other words, the team at NevGold thinks they can easily double or even triple the 1.1 million ounce resource. But that's not all. Some of the deep drilling results from NevGold's latest release indicate that NevGold may be close to the source of all of the fluids, and that source is usually related to the high-grade feeder structure, which is part of the system NevGold is exploring right now. In hole 3, NevGold hit 2 separate vein breccia zones over 11 meters and 7.5 meters wide, respectively. That could be part of that high-grade feeder structure. Assays are pending for these 2 areas, and we should see those results within the next month, so they're on to it. As NevGold learns more about the deeper part of the system, they could potentially hit a feeder system that could host grades as high as 1 ounce per ton with widths between 5 and 20 meters, which leads us to the next topic, grade. As our readers know, when it comes to mining, grade is king. While the gold grades intercepted in the Nutmeg resource, ranging between 0.7 to 0.75 grams per ton, don't seem spectacular, they're actually considered high grade for heap leach projects. More significant is that NevGold recently intercepted 79.3 meters at 0.72 grams per ton gold from 10 meters depth, including 13.4 meters at 2.32 grams per ton gold from 26 meters depth. Those are very good numbers. For comparison, many projects in the western USA have grades less than 0.5 grams per ton gold. Let's take a look at this. Another important consideration is the strip ratio and how close the gold is to surface. The strip ratio refers to the amount of waste material, otherwise known as overburden, that must be removed to extract a given amount of valuable material, otherwise known as ore. It is defined as the ratio of the volume of waste material to the volume of ore in an open pit mine. For example, if a mine has a strip ratio of 3 to 1, it means that for every 3 units of waste material that must be removed to access the ore, only 1 unit of ore can be extracted. A higher strip ratio generally means that the mining operation is less profitable, as more resources must be expended to remove the waste material before reaching the valuable material. The gold at Nutmeg starts at surface, which means less material to remove to get the gold out. When you combine gold grade with strip ratio, Nutmeg's profitability prospects get even better. The average project in the western USA has a strip ratio adjusted grade of just 0.24 grams per ton. The strip adjusted grade at Nutmeg thus far is 1.18 times, over 4.9 times better. At Limousine Butte, NevGold's Nevada asset, more on this in a bit, is 0.62, over 2.5 times that, potentially making NevGold projects much more profitable compared to its peers. When we adjust grade for strip ratio at other projects in the western USA, see this figure, Nutmeg has some of the highest grades around. Looking at comparable projects in the US, many of them are either producing gold now or have recently been acquired. In fact, 2 of the above projects in the image, North Bullfrog and Pan, belong to our past Corvus Gold and present Calibre Mining Aquidia portfolio companies. As such, you can see why we're shareholders of NevGold. These numbers further build the case that the current Nutmeg resource is a high-grade heap leach project in the western USA with a strong potential to get much bigger. NevGold inaugural drilling at Nutmeg just began this year, and these are only the first batch of results. But another 3 holes have been completed and more assays are still pending from the initial holes. We could be in store for some fireworks in the coming weeks. And this is only one of NevGold's prospects. NevGold has another flagship project, the Limousine Butte project in Nevada. Last year, NevGold drilled nearly 10,000 meters at Limousine Butte, returning exceptional near-surface oxide gold results. In fact, the team has told me that they are well on the way to delivering a potential 1.25 to 1.5 million ounce resource here. Limousine Butte is a traditional Carlin-type gold deposit that is seen all throughout Nevada, a jurisdiction that almost always carries a premium in the gold mining space. The one differentiating factor is that much of Limousine Butte has not been drilled out, and the project's footprint is growing with each drill hole. The focus of the 2022 drilling was on Resurrection Ridge and Cadillac Valley target areas. Resurrection Ridge was a past producer and mined about 100,000 ounces of gold between 1989 and 1990. And as gold miners know, there's no better place to find more gold than right next to a mine. And that's exactly what NevGold did in 2022. They drilled a large number of positive holes at both target areas with key intercepts, including 61.6 meters at 2.19 grams per ton gold, 44.4 meters at 1.3 grams per ton gold, and a whopping 175.2 meters at 0.6 grams per ton gold, and then another 126.2 meters at 0.83 grams per ton gold. All of them oxide. Those are high-grade numbers with long intercepts, especially for a near-surface oxide gold project. It's no wonder the district around Limousine Butte is heating up. One of the world's largest copper producers, Freeport-McMoRan, is conducting a large drill program adjacent to NevGold's southeast, and they think that they're on to the next large copper discovery in Western Canada. This could be a complete game changer for the district. NevGold believes they control the strongest land position next to its neighbors, which is a great position to be in. For those new to junior explorers, let me give you a quick 101 on how the market values these stocks. If you had to put a fair price tag on an average S&P 500 company, you'd probably use earnings multiples such as PE or EV over EBITDA. These metrics weigh the company's earnings against its stock price, which is useful for the likes of Procter & Gamble or Coca-Cola. But in the world of junior miners, things are different. You see, the mines aren't that far along in development to project cash flows or earnings. So, at this stage, the miner's valuation is not so much about how much money it's raking in as it is about how much gold they're potentially sitting on. For those reasons, investors often use a metric, which is the enterprise value divided by ounces, to value junior miners. The metric takes the company's enterprise value and divides it by the total resources of gold in the ground. What does that mean for NevGold? At the time of this video, NevGold is trading at an approximate $25 million Canadian market cap, or less than $15 an ounce in the ground. Peer companies with gold resource in the Western USA trade at $70 per ounce in the ground. That's a massive price difference and provides a strong argument for a re-rate of its share price. But that's not all. NevGold plans to drill Nutmeg and Limousine Butte this year in an attempt to hit the 3 million ounce mark. If they're successful, the company could rise to a $200 million valuation based on comparables. That's 8 times where it trades today. And that's assuming gold prices don't go higher. Of course, like every investment, there are risks, and NevGold is no different. Prices of gold could fall and drilling might miss. Ultimately, junior exploration companies are mostly negative cash flow businesses. That means NevGold will likely be diluted further as the company will need to raise additional capital or issue more stock to achieve its goals. Furthermore, junior gold companies are less liquid than their large cap counterparts, which means a little bit of buying can send shares higher and a little bit of selling can send shares lower. It's important you conduct your own due diligence and value NevGold based on your own assumptions. As we have always said, success is defined by risk, and with risk comes the potential for failure, but also the potential for success. The higher the risk, the higher the reward. As longtime Equitia readers know, large gains are not uncommon when you bet on early stage miners at the right time. What's happening now is eerily reminiscent of what happened nearly 50 years ago. The devaluation of the dollar, a rise in oil prices, UK almost in a recession, real GDP growth decline, rise in inflation, and money printing. In the year prior to the 1973 crash, stocks were doing incredibly well, with the DJA gaining 15% in 12 months. We're seeing the same thing now. As the stock markets peaked in 1972, the bears kicked in, and stocks fell dramatically during that time. While stock markets rebounded eventually, that recovery process was slow. The United States didn't see the same level in real terms until August of 1993. That's over 20 years after the 1973-74 crash began. While stocks lost nearly half of their value during that time, many gold mining shares easily quadrupled in value, some of them far more than that. The surge in the gold and silver sector was dramatic, and it changed the lives of investors who took the risk to participate when no one else would. Recent market events are pointing to a major surge in gold mining stocks in the next few years, and as a result, this year may be one of the best opportunities in the last decade to own them. The next few weeks will be critical for NevGold. Don't blink, you may miss something big. Seek the truth and be prepared.